So let's go to American Express, log in, and go to your card. I'm going to choose this card. So you can see that my payment is due on December 14th. My payment is due on December 14th. My balance right now is 525. My payment is due on December 14th. But if you click on statement and activity, you can see the closing statement closing is December 19th. December 19th is when they send this balance to the credit bureau. Your payment due date is different from your closing date. The due date is the last day to pay this before late fees and interest kicks in. So due date is for late fees and interest, but statement closing date is what impacts your credit score. Due date is what impacts your late fees and interest. Let's say I pay this whole thing off because I don't carry over balance. I pay everything off. I pay off before December 14th. So I pay off, it's zero. But then after I pay off, I start using this card again. By December 19th, I've used this card. Let's say I used $1,000. Even when I have paid off the 525, that $1,000 is what's going to be reported on that closing date. Whatever amount is here. So paying off your card is not really the problem. The issue with your credit score is what is sent to the credit bureau on the closing date. If you paid off $525.20 and then you turn around and swipe that card before December 19th, whatever you swipe that, whatever the total is what is sent. So what I usually do is I'll pay this off. I won't use this card until December 21st. I'll wait till after December 19th. So I'll pay it off. I'll pay it down to something like $50 because you want them to see that you're using the card, but you're not carrying a lot. Because if you pay everything off and it reports 0, 0, 0 all the time, it doesn't improve your score. You want them to see that you're using, because if they keep reporting 0, it shows that you're not using the card. And how do I grade you on your integrity, financial integrity, if you're not using the card at all? They want to see that you're being responsible, that you're using it and you're paying it down. So I will pay this down to $50 and I will not use this card until after December 20. When they send the report, they will send it that $50 is what's left. On some credit cards, for me, American Express that I use, you can also check your credit score here. You come to your financial tools. This is the same thing with Chase. I have Chase also. And you click your FICO score. It brings you to the next screen, loading your FICO score now. But right now, this is my score. It goes up and down because I'm always pulling money, borrowing money for properties and businesses. So right now it's 766. So you can look at your score here. You can look at your payment history, your amount of debt, length of credit history, amount of new credit mix. Remember the 5 factors that I talked to you about? Your payment history, your amount of debt, length of credit history, amount of new credit, and your credit scores. These are the 5 different factors. See how it tells you 35% impact on your score? Look at the late payment that I've had. This was when I missed that mortgage payment, my very first mortgage payment. I thought you just buy a house and you go sit down and find yourself that you've arrived. I bought and I traveled out of the country on vacation and I forgot to set up auto payment. I missed the first mortgage payment, and that I lost over 140 points with that. I learned my lesson, and that is still here. That is still here. That impacted my credit score a lot. I had to rebuild. So that one is still here. It falls off after 7 years. It's not 7 years yet. So your payment history impacts 35% of your score. Your amount of debt impacts 30% of your score. Your length of credit history impacts 15% of your score. Age of oldest account is 12 years for me. And this is why I put my daughter on my card. She's an authorized user. So all of this is transfers to her because now her oldest account is also 12 years. It shows very long credit history, perfect payment, amount of new credit. It's exceptional because the last time I opened was 2 years and 11 months, almost 3 years ago since I got the last credit card. So the impact on your score is 10%. If you keep requesting for multiple cards, it makes you look desperate. And then credit mix is very good too because I have 8 credit cards. I have mortgages is for 7 7 different mortgages, and then business loans. And then you can view your full score here and look at all the times. You want to be looking at this and know what is killing your score, okay? So these are, I have about 4 cards. I canceled one, which I shouldn't have. You see how this is my credit limit for this one, 16,000. I only use, for this month, I've only used 268 on this card. And the platinum, I've only used 453 on this card. My utilization is under 10% at all times. This is a credit limit of 30,000. I only use 525. This is a credit limit of 20,000. I haven't used this one yet this month. You see how I keep my utilization under 10%. Another thing that I want to share with you is that at first I didn't have this high limits. Every 6 months, I come in here and request a credit limit increase on each of these cards. I do that every 6 months on all my cards. I request a credit limit increase because then this expands your utilization. If your limit is $1,000, you don't want to go above $100 on that card. You want to keep it under 10%, which is $100. But if your card is $50,000, you can use up to 5,000. So the more you get increase on your limit, the more your 10% is expanded. The more your 10% increases. So pay your cards off. Don't carry over balance so that when you come to request credit limit increase, they will go ahead and give it to you because then that expands your 10% utilization. That's another thing that I do.